Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, for all the dads that are watching, listening, happy Father's Day. I hope you had a great day. Let's kick it off by talking about Bitcoin because obviously there's macro uncertainty out there with the war between Israel and Iran. And of course, wars are never a good thing. You have a lot of innocent people that lose their lives and you go through a lot of hardships. I don't think I need to go through that. But the question is this ending the crypto bull market? Is this going to stop everything, right? That is the big question. That is something a lot of people are talking about and with the uncertainty around it. And I want to take a look at the charts. And I also want to remind you that remember the Russia-Ukraine war. Remember COVID and the shutdown of the economy. Did those things stop the bull markets? They did not, because bull markets are not tied to these things. They're tied to global liquidity and a softer financial cycle. So we, of course, went through the quantitative tightening cycle starting at the top of the last bull market, which was about November, December 2021. The Fed came out, started raising rates, stop purchasing securities and much more, stop supporting the markets, and then full bear market. Then they paused rate hikes, then central banks around the globe started printing money again, and global liquidity has been on the rise since. So we're still in a bull market by those respective signals and metrics, and we're going to talk a bit much about that. But I want to make sure that you understand that despite war being a bad thing or there being bad news or things like that, it doesn't mean the bull market's over. So we have to pay attention to the facts, the data, the metrics, not our emotions, because yes, we can feel fear. Yes, we can feel uncertainty and feel bad about what's happening in the war and much more. But that does not mean the bull market's over. So Bitcoin on the daily chart still hovering around the 103 to 105,000 level. I think we could potentially keep going down and touch 98K, a kind of a key support level there. We are still comfortably above the 200-day moving average. And as I always say, nothing good happens below the 200-day moving average. If you're below it at an extended period of time in a downtrend, that's a bear market. But if you're above it and you got an uptrend like we've been seeing, we're in a bull market. So I know that's a very simplistic way of looking at it, and it's just one metric. We're going to look at multiple things. But overall, things are still on track here, despite the headwinds and the volatility we may face. If you look at the stock market, specifically the S&P 500, we have V-shaped recovered out of that tariff crash that took place in March and April. And the stock market is cooling down a bit, but nothing goes up in a straight line. It is above the 200-day moving average as well. And here, Titan of Crypto analysts on X highlighted Bitcoin from a weekly standpoint, said Bitcoin is sitting right at the key structural level. Holding it would preserve the bullish structure. The weekly close will be crucial. So we're seeing Bitcoin still holding the key support levels, which is good. And some of the macro metrics that we've been following for a long time, such as global liquidity, shows global liquidity continues to rise. So this is all the central banks around the globe and what they've been doing as far as currency debasement, and more liquidity goes into the economy, the markets, and much more. And that there is a lag. Bitcoin and other risk assets lag global liquidity by 3 months. So everything is still on track here. Now, if there's a deviation, we'll go back to the drawing board and say, okay, what happened, right? What was the catalyst that changed this? But right now, it's still on track. And in addition, the DXY, the dollar currency index, continues to break down. And here, the folks at Global Macro Investor, Julian Patel, who works with Raoul Pal, showed in the last Trump administration when they were looking for a weak dollar, because of course that's great for risk assets and the markets and much more. We see the current DXY pattern in this downtrend is following that as well. So there's room for this to keep going down. And of course, that's very good for risk assets. So you see these macro metrics, if you want to call them that, are aligning to bull market, right? All feelings and emotions aside, you're going to see people say, see, that's it, it's over, see, war. Yet they would simply forget about the Ukraine-Russia war when everybody was saying the same thing. See, war, no bull market. Bull market's canceled this time around. And it's like, Yeah, that's just sentiment. That's just your emotions. That is not based on data. So the data is showing us something very different. Now, if you go to the Fed's website, you look at the M2 money supply, and we were just talking about global liquidity. Look at this. It is just spiking, going higher and higher. So they've got some pseudo quantitative easing going on here. They're inserting liquidity in different ways. So the numbers don't lie here. And of course, like I said, assets are correlated to this. I love what expert trader Sven Henrik had to say. You usually see him on CNBC. He says, all I know is that the final missile will be QE. He's absolutely right. Whether it's war or COVID or whatever it is, what are they going to have to do? Print, right? This is the status quo. There's no way around it. This is the fiat system, and your asset prices will rise as a result. So that's why you want to be positioned in assets. You want to buy the dips, buy the blood on the street, and of course, sell the blow off top, sell the euphoric greed phase. That is what we're looking to do. This bull market's not over. Now, let's validate this thesis with some more data. On-chain data from Sentiment shows Bitcoin whales with 10 or more Bitcoin in their wallets continue to accumulate. There was a massive spike at the end of May into early June, and that calmed down a bit, but now it's slowly on the rise again. So the whales are not exiting the market, they continue to accumulate. So when I look at all these things, global liquidity, DXY, the stock market, the Bitcoin chart, and the structures that are still in place, and whales keep accumulating, I have all the respective facts, and there's more, but these are the key ones, that we are still in a bull market, despite what the news tells you, despite what people will post. Oh, it's over. See, fear, 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 right? They want you to feel fear, but they won't give you any data. They won't give you any chart analysis. They won't give you on-chain data. They won't say, look at the macro, despite what's going on in the news. So, guys, make sure you're listening and watching the right things and not falling for nonsense and people who are pushing fear. And on the topic of whales accumulating, we are seeing Bitcoin ETFs, so we're talking BlackRock and all the big issuers, continue to see inflows. So they're not seeing outflows despite the geopolitical tensions. So here's the headline: Bitcoin ETFs record 5-day inflow streak amid geopolitical tension. So people are buying the dips and buying the fear. And look, that's the principle of markets, as Warren Buffett said, right? Be greedy when others are fearful, and fearful when others are greedy. If you've been here long enough, you know the cycles, folks. You know that when the grandmas and taxi cab drivers and Uber drivers are talking about crypto investment and everybody's bullish and they think it's not going to end, it's going to keep going, that's when you want to be fearful. I know it seems weird to say that, despite, once again, war in the Middle East. And look, there's been always been war in the Middle East. I mean, it's been going on forever. But regardless of these things that are happening, you got to look at the data to see what's happening, especially global liquidity, and that'll tell you the story of where things are going. So inflows continue here, and look at this. Michael Saylor says he's looking to buy Bitcoin despite the Israel-Iran conflict. So we could hear an announcement tomorrow that him and the folks at Strategy bought some Bitcoin. So I think the signs are there, right? In multiple ways, the signs are there as to where we're at and where we're going. So at this point, we got to be patient. And I know that's a big part that people struggle with, the patience. I want the money now. I've been waiting too long. I'm tired of all these things. Leave your emotions at the door. If you leave your emotions and just look at the data, it becomes a lot easier. And if looking at the price bothers you, take a break from it. If nothing's happening right now, Bitcoin's just consolidating, and in fact, it may go lower before we go higher, then step away from the charts. That's a great thing to do. I do that. I don't look at my portfolio on days like this and when things like this are happening. I've mentioned that before. I don't open my Trezor suite or hardware wallet suite and take a look at my portfolio value. I just don't do it. I've learned my lesson because look, it sucks to see your portfolio declining or even in some sort of pullback, despite being up significantly from the bear market bottom. So we're all human, and we got to do the things that help us to navigate the markets. Now, folks, quick word from our sponsor, and that is Trezor. Trezor makes beautiful hardware wallets that make it easy for you to safely store your crypto. I'm a user of the product. I use the Trezor Safe 5, and Trezor, they were the ones that created hardware wallets. They started doing this in 2013. They created the seed phrase setup and much more. And Trezor supports all your major crypto tokens, Bitcoin, Ethereum, XRP, Solana, and all the latest tokens as well. They even have a software called Trezor Suite that helps you to manage your crypto assets. And their hardware wallets, by the way, guys, are open source. And you can also get hand-holding service from Trezor. They have an onboarding service that you can speak to a rep and they'll walk you through everything. And folks, you can get 5% off by using the code Thinking Crypto, all one word. Thinking Crypto, all one word. Get 5% off. So check out Trezor. They make great devices. Like I said, I'm a user, so check them out, guys. All the links will be in the description. Now, here's some interesting news. We know Trump and his companies, quite a few of them, are involved in crypto. You got World Liberty Financial, you got Trump Media, Truth Social, all getting involved with crypto in one way or the other. So here's the headline: Trump Media clears SEC hurdle for $2.3 billion share resale. So many may recall they are looking to do a Bitcoin treasury strategy, and they raised $2.3 billion to buy Bitcoin. So incredible. And then you got Truth Social, if I'm not mistaken, they're looking to launch a Bitcoin ETF. And of course, World Liberty Financial. The only thing I'm not a fan of is the meme coin, but it is what it is at this point. But Trump is making progress. And once again, read between the lines here. You could hate Donald Trump or you could love him. That's not the point, right? Put that to the side, how you feel about the man. Just look at the business moves he's making, what his kids are doing. If you know Trump, he's about making money. He wouldn't be doing this to lose money. He knows legislation's coming. He knows markets are going to go higher. So he's positioning himself, especially around crypto, because he knows it's going to go higher. I don't think he's going to do this to lose his money. All of a sudden, the bull market's over. We're entering into a bear market and everything goes down by 80%. Obviously, he's not going to do that. So again, read between the lines, right? And once again, all politics, all feelings aside, once again, if you hate or love the man, that's not the point. I'm looking at this strictly from an investment standpoint of who's making what moves, who's getting involved, watch what they do, not what they say, right, folks? So this is a very bullish sign. Now, something interesting came up. Someone on X tweeted about how if you go on Coinbase, right, and Bitcoin is currently trading at $105,300. But if you look to buy some of that Bitcoin at that price, they charge you $106,900. And if you want to sell, it's $103,950. Why is that? It's fees, right? There's a markup, and these exchanges are making a lot of money. And Eric Balchunas, who's an ETF expert at Bloomberg, says, like I've been saying, crypto exchanges have commissions that would make a 1970s stockbroker blush, especially for newbies. No wonder ETFs growing like wildfire. They blow this shit out of the water. So he's saying, and it's along the lines of what I've been saying for a long time, these crypto exchanges better up their game because Wall Street's here for the takeover. And they're going to look to steal market share from these crypto exchanges, whether it be Coinbase and Binance and much more, because they charge a very low fee. And they're able to do that because they're dealing with volume, right? And they have the brand, they have the existing customer base, and they're pushing this to the mainstream, while crypto exchanges, don't get me wrong, are catering to mainstream, but they're not able to make that major push like a BlackRock or Fidelity, which is already established. You know what I mean? So these crypto exchanges better watch what they're doing. If they're going to charge an arm and a leg, they're going to lose business to people who are going to go with ETFs. And if the TradFi folks start saying stuff about the exchanges like, hey, you got to be careful with these guys. You can't custody with them. They don't know what they're doing. Trust us. We've been doing this for a long time, longer than they have, right? That's a plausible narrative to put out there to take business away, right? I'm not saying I want all these things to happen. I'm just thinking logically here of what may take place. So it's something that you need to be aware of. Now, exchanges like Coinbase and even other platforms have advanced features. Like Coinbase has the advanced feature where the fees are lower, but you got to know what you're doing as far as doing these things. You can set limit orders for buy and sell, and there's a maker taker fee, but it's not like, what they're charging here. So, something to keep in mind. And like I said, if these exchanges don't up their game, Wall Street's going to come in and say, hey, the ETFs, you don't have to worry about anything. We've custodied your traditional assets like stocks and gold and much more. We're going to custody your crypto for you. And it'll be a lot easier for you than going to exchanges and much more. So this is just an interesting conversation that took place today that I think you guys should know about and be aware of with how exchanges charge fees and the markups and much more. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way you can support me is by subscribing to my free email newsletter. It's 100% free. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. Thank you for watching and listening. I appreciate you all, and I'll talk to you all later.